If you enjoyed this podcast, please subscribe, like, and share so we can find others like yourself. BitcoinProsperityPodcast.com.
Right, like if your 8th grade girlfriend who teaches piano lessons is asking about Bitcoin, it's a bubble. And then it went up to 7,000. And then my wife's best friend's 14-year-old son bought Bitcoin. And I was like, what is the world coming to? And it turned into this giant bubble. And I don't participate in bubbles. I don't. Maybe I should. So my objection to it wasn't really the technology or the blockchain or anything like that. My objection was just the fact that it was a speculative bubble, just like like I'd seen in .com, just like I'd seen with the housing bubble. And then when prices started to come back down, then I started getting interested in it again.
Welcome to the Bitcoin Prosperity Podcast with your host Gordon, that's me, and Ferris from CoinCompass.com, enabling you to safely buy and securely store your Bitcoins. All resources are in the show notes and description, including our full disclaimer. Visit BitcoinProsperityPodcast.com to subscribe and discover other free content. Well, good morning, good afternoon, good evening, everyone, wherever you are listening or watching this. We have a very special guest today on the Bitcoin Prosperity Podcast. But before we get to him, the current block height is 628,915. And if you have no idea what I'm talking about the current time according to the Bitcoin blockchain. And the current price of Bitcoin is $8,854 according to Bitstamp. So I am out of the lockdown, Faris, at the beach. What is happening over in the bunker?
Hey, thanks, Gordon. So yeah, for the rest of us not in blockchain time, for me, it is the 5th of May, 4:15 a.m. in New Zealand. I'm out of my bunker and we've been living in these isolation bubbles. And because I've been living alone, I've been allowed to extend my bubbles to some friends. So it's been nice to catch up with some people. But yeah, I'm very excited to announce our next guest, Jared Dillian of Daily Dirtnap. Real pleasure to have you here, Jared. Thank you so much for joining us.
Yeah, thanks for having me.
Now, before we get into it, one thing I want to mention is yours is one of my favorite Twitter feeds to follow. I know myself and a few other people, we tend to probably put a lot of thought and editing into our tweets before we put them out there. With your Twitter feed, I kind of get the impression this is what I'm thinking, it's going up
there. Yeah, sometimes I get myself in trouble with that, but yeah, it's pretty unfiltered.
Well, I've got a confession to make. About last year, I can't remember exactly when, but you almost blocked me on Twitter. And reason being was you said, I think it was a Friday, post your unpopular opinion. And you posted something about James Bond, and I responded, my unpopular opinion was that Daniel Craig is the worst Bond. And you said, them are blocking words. So I had to take it back.
Oh, I was just kidding. No, I wouldn't block anybody for that. But
No, I know you were. Yeah. So yeah, for everyone out there at Daily Dirtnap Twitter feed, that is one of my favorite Twitter feeds to follow.
Well, thanks. Yeah, it's I think it's an acquired taste. There's people that definitely have a lot more followers than me, but it's a loyal group. Yeah.
All right, Gords, I'm going to let you fire with the first question for Jared.
Sure. So I guess the obvious question is, who is Jared Dillian, or should I say DJ Stochastic?
Yeah, I do a bunch of stuff. So I started working in finance in 1999. I started as a clerk on the floor of the Pacific Coast Options Exchange out in San Francisco. And that was during the .com bubble, which was absolutely incredible. I got to see all that. I was getting my MBA part-time from University of San Francisco. And then I got a job at Lehman, started in 2001. A lot of people don't know that Lehman's building was actually downtown for 9/11. So I was there for 9/11. I did index arbitrage for a few years. And then I ran the ETF trading desk from 2004 to 2008. It's kind of when ETFs were just, entering that period of growth. After that, at the bankruptcy, I left and started my newsletter, the Daily Dirtnap. I started in 2008. I wrote a book in 2011 called Street Freak: Money and Madness at Lehman Brothers. That was a very successful book. And then in 2016, I wrote a novel called All the Evil of This World, which is a little, it was a less successful book, but actually I'm very proud of that one. And I write for Malden Economics. I write editorials at Bloomberg. I've also written for Forbes and TheStreet.com. And like you said, in my spare time, I'm a progressive house DJ, and I don't do it a lot, but I have like 4 or 5 gigs a year, and a lot of music on SoundCloud, Mixcloud, and stuff like that. So especially during the lockdown, I've been posting a lot of music for people to listen to. So.
Wow. Sorry, before Faris gets on to his economic questions, just one more question perhaps. Where to begin? You've got such a colorful life, but you also work for the Coast Guard as well. Yeah.
Before all that, I went to the Coast Guard Academy, and I was in the service for 5 years. I left as a lieutenant. I had a couple years on a ship out of Washington State. And then I spent a few years working in intelligence. So yeah, it was a good experience. It was a good start.
Sounds like you've had Magnum PI's life.
It's been pretty cool. It's not, the thing that I left out is 9 months ago, I started a nationally syndicated radio show called The Jared Dillian Show, which focuses mostly on personal finance. So I've been doing that for almost a year now, and that's growing very slowly, and it's a lot of work, but I'm hoping that's going to pay off someday.
Feel free to plug that. I listened to a couple of episodes. Do you want to plug that and how perhaps people can get involved or call in or?
Yeah, if you can stream it. I'm live 6 to 8 p.m. Monday through Friday. That's Eastern time. And you can go to jareddillianmoney.com and you can stream the radio show and you can call in. So yeah, I'm on every night.
And what kind of questions are you looking for?
Oh, just basic stuff, like the basics of investing, saving, credit cards, mortgages, car loans, stuff like that.
Jared, before we get into Bitcoin, you've just raised something in the back of my mind here. Post 2008, a book I read was, I'm trying to remember this correctly, I think William Cohen, House of Cards. Yeah, it was a play-by-play of Bear Stearns, and the book you just mentioned. And I think recently in an interview with Grant Williams, you talked about, how do I put this delicately? Probably the ineptitude or inefficiencies within governments and how certain conspiracies just can't happen because you just need too many people moving too many parts at once. And that book by William Cohen kind of, to me, frightened me because it was like, does anyone really know what's going on here? So yeah, I suppose we'll jump ahead to a lot of moving parts in the global economy right now. A lot of things being uncovered underneath the rug. How concerned should we be that there are people out there that know what they're doing, know what's going on? I'm thinking, for example, what's happening in the repo market, sovereign debt, all these things, or is it people are just scrambling at the moment?
What you have is a disconnect between the financial markets and the real economy. And, there's a lot of people who have been very confused by the stock market and how it's bounced. The S&P's bounced 600 points off the lows. And, they say, look, we're going to be in this very deep 18-month recession. It's going to take a long time to come out of. Why are stocks so high? Valuations are still high. And, kind of getting back to your earlier point, the Fed is explicitly supporting muni bonds, corporate bonds, high yield bonds, the treasury market, the mortgage market. And in doing that, it's kind of implicitly supporting the stock market. And that's, and it's funny, if you look at the bond market, they're buying high yield, but there's some bonds that they're buying and there's some bonds that they're not. So the bonds that they're buying are trading at 4% yields, and the bonds they're not buying are trading at 10% yields. And it just goes to show that there's parts of the markets that are being supported and parts that aren't, and it's leading to this, bifurcation. And that's really causing most of the confusion. And from the economic standpoint, we will probably have an 18-month recession. I try to focus on, the Fed is the easiest institution in the world to predict. They're super easy to predict, and people get focused on instead of what they will do. Okay. And there's a lot of commentators out there who, they say, well, they're creating moral hazard and this is morally wrong, and they're focusing on what they should do instead of what they will do. So I try to focus on what they will do. And in terms of policy tools, they have a couple of things left. They have negative interest rates and they have buying equities. Those are the last two things that they haven't done. And my suspicion is that if we sell off to the previous lows of around 2,200 in the S&P, you'll see those policy tools come out.
Yeah, so with that, I was reading on a Gallup poll that going into 2008, you had, I think it was about 63% of Americans were invested in stocks. Now it's around 50%. And that dramatically dropped the younger the participants are. So my concern is looking long-term. If you have a stock market that's going up, high unemployment rate amongst the youth who are not participating in the stock market, and then you get President Trump saying stock market's going all-time highs, you're going to have a further disconnect of young people who appear to be not involved in the stock market rally and simply don't have work or this prospect of work. Is that a demographic concern or a sociological concern from your point of view?
Yeah, that's a very long-term concern. I mean, millennials have always been underinvested in stocks. Millennials actually like real estate a lot. They're big investors in real estate, and they're also investors in crypto. So it's just sort of generational preferences. I mean, I think as, millennials are actually getting kind of old. I think the oldest ones are around 37 or 38 now. But I think as that bulge kind of moves through the population, I think you'll see more participation in stocks over time. It was a little different with my generation. I started investing when I was 23. And, I was being told that I had to start saving for retirement early. I had to invest in index funds. I had to be saving 20% of my paycheck. And, when I was 24 years old, I had, a decent amount of money saved up in mutual funds. That's what I did. I don't think the millennials do that.
No, you're right. They are investing in crypto and Bitcoin. And that's there's a lot of research on to confirm that. Besa, you had some very strong opinions about Bitcoin, and then you changed those opinions. Can you just tell us about that journey, please?
Yeah. I was definitely a late adopter. I was hearing things about Bitcoin for a long time and never acted on it. And then sometime in 2017, towards the end of 2017, I could tell that, I'll just tell you a quick story. I had a girlfriend from middle school, my 8th grade girlfriend, and she's been divorced twice, and she teaches piano lessons and she gets alimony. And she sent me a Facebook message and she asked me, should I buy Bitcoin? Okay. And this was when it was around 3,000. And I told her no. I said, because this is a bubble, right? Like if your 8th grade girlfriend who teaches piano lessons is asking about Bitcoin, it's a bubble. And then it went up to 7,000. And then my wife's best friend's 14-year-old son bought Bitcoin. And I was like, what is the world coming to? And it turned into this giant bubble. And, I don't participate in bubbles. I don't, maybe I should. So my objection to it wasn't really the technology or the blockchain or anything like that. My objection was, just the fact that it was a speculative bubble, just like like I'd seen in .com, just like I'd seen with the housing bubble. And then when prices started to come back down, then I started getting interested in it again. So, that's really what it was. So
what was the intellectual flipping there where, okay, this isn't a bubble. This is something I actually need to start looking into?
Probably, I'm not really sure what that point in time was. Like I said, I was very late on this, and I was experiencing regret. And actually, there was a friend of mine who was an early investor in Ripple, and I remember him telling me when Ripple was, fractions of a penny, about, Ripple's role in the payment system, and I should get involved in Ripple. And, there's like this theory that people don't buy things until they hear about it 6 times. Some people have to hear something 6 times before they buy something. And I just never got over that threshold. So there was a part of me that literally just experienced regret because I believed in the technology, but I just, couldn't get over the hurdle. So I don't know, that's what I eventually did.
So was your regret not buying Bitcoin, or was your regret buying Ripple?
Not buying Bitcoin.
I just wanted to clarify.
Yeah.
Do you want to learn how to safely buy and securely store your Bitcoins? CoinCompass.com is running a free 2-hour webinar on Sunday, 31st of May. To register and for more details, visit CoinCompass.com/webinar.
Yeah, so there's still a lot of very strong anti-Bitcoin and pro-Bitcoin arguments out there, and we tend to avoid them because we think people just get a bit too emotive. But why do you think there is such strong emotive arguments about Bitcoin?
Well, from my standpoint, I'm a gold investor. I have a very high allocation to gold, and I have for a long time. And it's Bitcoin it raises some interesting questions about value, right? And my criticism of Bitcoin was that, just because something is scarce doesn't mean that it's valuable. So what makes something valuable? Gold is scarce, but why does gold have value? Well, gold has had value for 4,000 years. It's just ingrained in the human psyche. So I kind of was stuck on, I understood the scarcity argument, and I understood the supply-demand dynamics, but I couldn't understand why literally lines of computer code had value. So that was the part that I was stuck on for a long time.
And what made you decide that it did have value?
Well, actually, it probably, I'm still not really sure. I'm not really sure. I don't know. I don't know the answer to that question.
Now, the reason I ask is we tackle this a lot. So what we do is we actually do sit down with people and we have to explain the basics, because Bitcoin's been around for 10 years and a lot of people are still struggling to understand the basic fundamentals about it. So yeah, that's why I asked him, a lot of people say, oh, if it's written down, it's not worth anything. It's like, well, there's caveman paintings in Indonesia, 30,000 years old. That's 30,000 years it's been there. You knew someone was there, so that proof of work. So that's why we ask, because we come across these questions. We like to prep for them.
Yeah.
So just going into that gold versus Bitcoin, is it still gold or Bitcoin, gold and Bitcoin, or is Bitcoin just complementary, or what's your thoughts there?
I think you have to look at it from a risk standpoint. I've been a portfolio manager, so I look at everything on a risk adjusted basis. I'm comfortable holding a 10% position in gold, whereas I'm only comfortable holding a 1% to 2% position in Bitcoin because of the volatility. Gold isn't, it's not that volatile, and it's just that it can easily have it in a portfolio. So the answer is gold and Bitcoin, but you just have to sort of risk weight the assets.
Right, Jared, you said you think you're a late adopter. Who are you comparing yourself to if you're a late adopter? Because I don't think you are.
Okay, well, yeah, people tell me that. Yeah, I have a friend that I do music with. I DJ with him occasionally, and he was what I would call an early adopter. He was buying Bitcoin at about $100, and ended up selling it between 500 and 1,000. So, sometimes if I replay that tape and I think about, well, what if I had bought it at $100? I probably would have already sold it. Yeah. So now I just have a completely different perspective.
Absolutely. Like, we've got tweets that we've saved where people will say, that's it, I can't handle Bitcoin's volatility anymore, I'm getting out at $12. So within the finance industry, so what you described to me was a trailblazer, someone that's in that early, but I think you're, still a trailblazer in the finance industry, because there's not that many people in your industry who are actually making the flip to Bitcoin. They're pretty anti-Bitcoin still, aren't they?
I think people are definitely warming up. I would say the traditional finance industry, if you go back to 2017, 2018, was really against Bitcoin. But I think today people are warming up to it, and it's starting to behave more like a traditional risk asset. Just in the last couple of months, it's been more highly correlated with equity prices. It's sort of behaving as a risk asset, and also the volatility hasn't been as bad. So I do think it's maturing, and I think that'll attract more people over time.
Yeah, we actually just posted a video about this, how I think Bitcoin's being a leading indicator to the Nasdaq, the S&P 500, and the VIX chasing these open gaps.
Yeah, no, definitely.
Yeah, and that we think is still a largely, people misunderstand Bitcoin story value. It's a way to make a quick buck at the moment is how we think a lot of these people are seeing it.
Yeah, I mean, from my standpoint, like I said, it's about risk-adjusted returns, and as the volatility comes down a little bit more, I'd be more comfortable, having a bigger allocation to it. So.
And is it just about the volatility? So, for example, to get you from, say, 1% or 5% in a portfolio, is it purely the volatility, or do you need to see more adoption or other things to change?
No, it really is just about the volatility. Yeah, because one of the things I talk about on my radio show with Personal Finance is that if you want to talk about asset allocation, if you go back 20 years, 30 years, people said that you should have an allocation to bonds, and your allocation to bonds should approximately be your age. So if you're 70 years old, you should have a 70% allocation to bonds and a 30% allocation to stocks. And that's because as you're getting closer to retirement, you can't stand the volatility that a higher percent allocation to stocks has. But in this last bull market, from 2017 to 2020, people greatly increased their allocation to stocks. Whereas, you had baby boomers walking around with 80, 90, 100% allocations to stocks. And that's just the wrong asset allocation. So,
with that, was it flipping to stocks simply because you weren't getting the yield that you used to be getting in bonds?
Say that again.
With the flipping to stocks, like more people buying stocks, is that because you're actually getting more yield out of owning stocks from dividends than the yield you're getting on the coupon in bonds?
Yes and no. I mean, definitely with interest rates being so low, it forces people further out the risk curve. But towards the end, it really became about performance chasing. From 2009 to 2019, stocks were returning 19% a year. And, I I don't really want to call it a bubble, but it sucked a lot of people in. And there was just this perception. It was basically like, beta became the new income, right? Like people couldn't get income from their fixed income investments. So they were kind of getting income from beta. And that's really the phenomenon that happened. So.
All right. So we've got a hell of a lot of things happening in the world right now. But if you look at the charts, you wouldn't think so. Elections coming up in the U.S. next year. What to you is your biggest concern right now that people don't know about or aren't paying attention to? Like, thinking of CDOs in 2008, all that kind of stuff. What's to you? This is the earthquake that I'm a bit concerned about in the financial plumbing.
Yeah, I definitely have an answer for that. So the thing that concerns me the most is this discussion about punishing China economically for releasing the virus out into the rest of the world. And one of the things that's being discussed is actually defaulting on bonds, interest and principal. China doesn't own a lot of U.S. debt. They own about $1 trillion, which is pretty small relative to the amount of debt outstanding, but it's still a lot. And that has the potential to completely change the world as we know it. It has the potential to change international relations. It has the potential to change international trade. People will only trade with trading partners that they trust. You have the potential for, I'm thinking out long-term, 5 to 10 years, but you have the potential for countries to selectively default on debt that's owed to their enemies. It's just a Pandora's box that you do not want to open. And it even, increases the likelihood of a military conflict. So, this has only happened in the last couple of days, but this is the thing that scares me the most.
Wow. Okay.
Sorry, from a non-investor economic point of view, from an IT guy, are you talking about the first country default on their debt will cause a cascade, a house of cards, or are you talking about a total, debt jubilee for all countries?
No, not a debt jubilee for all countries. I mean, specifically what the U.S. is talking about doing is just refusing to pay interest and principal on debt held by China. But the problem is the precedent that it sets. And I mean, look, Trump is the first president to use economic power as a weapon, rather than diplomacy or military force. So he did this with the tariffs. Okay. And, using U.S. economic power as a weapon. And this is just another extension of that. But, countries don't default on their debt except for in rare cases like Argentina, which is a serial defaulter and stuff like that. But, you don't intentionally default on your debt. So.
Well, the IMF doesn't let you do it. They just give you a higher credit limit.
Yeah.
That's it for questions from me on the macro stuff. Gorse, you have anything else?
No, I noticed that you got a bachelor in computer science. Is that right?
Yeah, math and computer science. Yeah.
Oh, wow. So you didn't pursue that field. Are you still keeping up with programming and all this blockchain technology?
No, I was a very bad computer science major. It was a split degree. It was computer science and math, and you could focus on one or the other. I mostly focused on math. I got B's in my computer science classes, so it's,
But at least that would have helped you some way, some sort of poker system or some card counting or something.
Yeah. I've done. I'm not very good at it. A lot of people think card counting is easy. It's actually very hard. It takes a lot of practice. I've tried, so I don't have that kind of patience.
Fair enough. Okay. So just going back to defaulting on debt, for example, the US default on debt with China. Have you been following the innovations in the digital currency in China, apparently weeks away from their implementation of the digital yuan?
No, I haven't heard about that.
Okay. Yeah, they just released some it's on the internet, so it must be true. But they just released some screenshots of a digital yuan and an app, and yeah, it looks pretty legit. And they say it's about a month away, so that'll be pretty interesting.
So actually, Jared, being a gold guy, what's your opinion on the Shanghai Gold Exchange and the gold yuan oil trade with Iran and Russia?
You have to educate me on that. I'm not really sure what you're talking about.
So China set up a gold exchange where you can buy and sell gold, but it's only physical gold, no derivatives, no leveraging. And the trade that they set up with Russia and Iran was, we'll buy oil from you guys, instead of paying you in US dollar, because they're trying to get off the US dollar, pay you in Chinese renminbi, but you can convert that renminbi to gold, which is why China's been buying gold in abundance for the last 10 years.
That makes sense. I mean, it seems like a pretty smart way to get off the dollar. I mean, it's like, physical gold is hard, as we saw with, the COMEX futures and the delivery problems that they had, once the virus hit. So, I mean, look, like for centuries, that's how we settled transactions. We sent ships around with gold, so it can be done. But it's a little bit clunky. So
yeah, if only there was an electronic safer version out there.
Well, on that note, do you put any faith in these sort of new stable coins? I heard the other day there's a gold pegged or gold collateralized, kind of like a tether for gold.
Yeah, I mean, I guess, like, for me, like, I don't think I need that extra step, Bitcoin is fine. Gold, I think gold backed, crypto is just like, I think it's a little bit, I'm not that paranoid. Let's put it that way. So.
Yeah, no, I agree with you on that one. It's unnecessary.
So if someone's listening to this and they're kind of on the fence about Bitcoin, what would you say to them?
I mean, the way I look at it as a trader, as somebody who spent, 9 years in the capital markets, I look at things in terms of supply and demand. I look at terms of things in flows. And, there's 21 million Bitcoin, 18 million have already been mined. A whole bunch of them have been lost. So maybe there's 13 million outstanding. And it doesn't take a really big increase in demand or adoption to send the price up a lot. It really doesn't, I mean, that's kind of what I'm waiting for. It's all based on supply demand dynamics. So
you're waiting for for like mainstream adoption or Wall Street adoption?
Let's say semi-mainstream adoption, Well,
there's only 3 million left. They've got to get in quick.
Well, thank you very much for your time today, Jared. Now, from someone as you proclaim to be a late adopter of Bitcoin, which I don't think you are, I still think you're in the vanguard there. Do you have any questions for us from a Bitcoin perspective? Because this is what we cover every day. So we've asked you a lot of questions. Anything you want to know from our end?
I mean, I have a ton of questions. I was actually talking to a Coast Guard Academy classmate last night who started a crypto fund, and he's invested in Bitcoin, but some of the other altcoins, and I just don't know the altcoin universe that well. Just being sort of plugged into Bitcoin Twitter, there's all these fights about altcoins and all this stuff, and like everybody yells at each other, and I kind of don't understand it, so there's a lot of things about crypto Twitter I don't understand, but I just kind of like a casual observer. So
that's the safest place to be. Yeah, no, we get asked that often. And one of the presumptions for people is that, I can't afford $9,000 for Bitcoin, I'll buy something else, without understanding that you can buy $20 worth. There's 8 decimal points to a Bitcoin.
Yeah.
So that divisibility is something we have to explain to people. And yeah, we found a lot of people went to the altcoins because they thought they can afford Bitcoin.
Is literally that's the only reason?
No, that's not the only reason. One was just the return factors. People thought, if Bitcoin went up 3,000%, let me jump on something new with the anticipation of up 3,000% as well. Not understanding, as you just mentioned, the denominator value that like Ripple has 3-4 billion ripples out there. And same with all these other coins. They're not limited in supply, but also the network effect. Who's behind these coins? Because with Bitcoin, you've got the world's leading cryptographic scientists, computer engineers working on Bitcoin.
Yeah, there are three kinds of cryptos. There's Bitcoin, there's Ethereum, and then there's everything else. That's basically how it goes. But Bitcoin suffers from that unit bias as well, because, I mean, a lot of people, and I'm not joking, went on to Coinbase, the most popular exchange in the world, and they say Bitcoin, Bitcoin Cash, Bitcoin Gold, Bitcoin SV, and they just buy something cheaper, and they're like, oh, well, I can buy 0.1 of Bitcoin, as Farah said, or I could buy, 4 Bitcoin Cash or 10 Bitcoin Cash or whatever it was. So it wasn't just the unit, it was also the name and the branding as well. There's, 20 or 30 different copies of Bitcoin, the name as well. So it's pretty confusing. Yeah. And Bitcoin.com is not Bitcoin. So
yeah, I don't have the time to evaluate all this other stuff, So
we recommend you don't. It's like with Bitcoin mining. People, I want to understand Bitcoin mining. It's like, no, you don't. You get on a plane, the fundamental mechanics of how a plane takes off, but you don't actually have to look on the hood every time you get on the plane. So same thing with Bitcoin mining. There's a lot of things that you think you should know, but you don't really have to.
Yeah, just understand the fundamentals and don't be scammed. The only reason why I ever bought altcoins was to trade them against Bitcoin so that I could accumulate more Bitcoin in the end. So, but you get burnt. Some of these illiquid altcoins, you get burnt pretty quickly because you can't sell at the price you want to sell at. So, just buy Bitcoin and hold it.
Oh, Jared, we are very grateful for you joining us today. Like I said, I'm a big fan of your work and your Twitter feed. Now, just tell our audience, and we'll put some links in our notes. Where can people find you? Where do you want to direct them?
You can find me at dailydirtnap.com. That's my newsletter. That's my primary business. I think people would enjoy the newsletter. So dailydirtnap.com. The radio website is jareddillianmoney.com. So, yeah, and you can follow me on Twitter at Daily Dirtnap.
Fantastic. Well, again, Jared, thank you very much for your time. We're incredibly grateful.
Thank you.
Thanks, Jared. Much appreciated.
Thanks for watching or listening. Please visit coincompass.com/free to register to our socials and discover other free content. Subscribing, liking, and following helps this content remain ad-free. Until next time.